Welcome back. So, we have a classic case of bad news for the economy is actually good news for your mortgage.
Oh, absolutely. It's the weirdest paradox in finance. If people are losing jobs, mortgage rates go down. And guess what? Rates are tumbling this week.
They really are. It's all stemming from some serious worries about the job market and some very surprising comments from the Fed.
Let's look at the scoreboard. The 10-year Treasury yield, which basically tells mortgage rates what to do, dropped to 4.1%.
Right, and that trickled down immediately. We saw 30-year fixed rates drop to 6.26%. That's a 9 basis point drop in just 2 days.
Which is huge in mortgage land. But the trigger for this was a bit alarming, a jump in unemployment claims.
Yeah, the initial jobless claims jumped to 236,000. That is the highest level since September.
It's a big jump. Now, economists are saying, hey, calm down, it's partly seasonal volatility. Post-Thanksgiving noise.
True, but even the experts are admitting that layoffs are starting to creep up. The trend is definitely pointing toward a cooling labor market.
But here is the real bombshell. Fed Chair Jerome Powell basically came out and said, we think the official job numbers are wrong.
I couldn't believe he said this so bluntly. He thinks the official data is overestimating job creation by like 60,000 jobs a month.
60,000? That is a massive margin of error.
It changes the whole narrative. The official reports say we're adding 40,000 jobs a month since April.
But if Powell is right about that 60K overstatement, do the math.
We're actually losing 20,000 jobs a month. We've been in negative territory for a while and didn't even know it.
So why are the numbers so off? It's this thing called the birth-death model.
Sounds dramatic.
It is. It's a statistical guess the Bureau of Labor Statistics uses to estimate jobs from new businesses versus ones closing down. Powell says it's broken.
Yeah, it's consistently overstating growth. The BLS is fixing it in February, but until then, we're flying a bit blind.
Okay, so jobs are shaky. What about inflation?
Actually, good news there. It's coming in a touch lower than expected.
Even with the tariff talk?
Powell seems to think tariffs cause a one-time price bump, not long-term inflation. So the Fed is shifting its worry from inflation over to unemployment.
Which brings us to the crystal ball. What is the Fed going to do next year? They're signaling maybe one more cut.
The market doesn't buy that. Investors are betting on 2 cuts, and the economists at Pantheon, they're predicting 3 cuts in 2025.
If the job market is actually shrinking like Powell thinks, 3 cuts sounds way more realistic to me.
There's one more stat that proves people are nervous, the quit rate.
It's down to 2%, lowest since May 2020.
Exactly. Nobody is rage quitting their job right now. They're hunkering down.
And when people stop quitting, companies can't rely on natural attrition to cut costs. They have to do actual layoffs.
So to wrap it up, the economy is slowing down, jobs are likely scarce, and the data is messy.
But silver lining, if you were trying to buy a house, this is the pressure that pushes mortgage rates down.
Exactly. Keep an eye on that December 16th labor report. It might be a wild one. Thanks for listening.
Catch you next time.